Hello there. My name is Craig Cobb. I'm the founder of the Gromico, and I'm a trader of over 20 years in markets. I started at a very young age. I'm 41 now. You guessed it. I started at 21, and my goodness, it's been a journey. Now, what I'm hoping to instill for you within this webinar is to help you to understand the core elements to getting started as a trader. As I say, I've been doing this for over 20 years now, and I have a bunch of stories. I dusted a lot of accounts in my first 4 years. My objective for you is to focus in on the areas to get you started. Now, when you get into trading, I want you to look at it like this. Before you got your driver's license, it seemed like driving a car might be overwhelming, and obviously depending on what part of life you were in, but when you were 10 years old, it probably seemed almost impossible. And as you're learning to drive, there was a lot of nerves. Chances are that when you learnt to drive, not only did you go to the school of mum and dad probably worked out it wasn't the best option, you then had to have some lessons with a teacher. Now, when you learn to drive a car, there is a series of things that you must do to pass your exam. Okay? You need to check your side mirrors. You need to check your rear view mirror. You need to check what gear you are in, or whether you're in park or forward or reverse. You need to the handbrake, the brake, the accelerator. What I'm suggesting to you is that when you learnt to drive, and certainly as you got your driver's license in your test, there was an itemized list of things that needed to be checked off before you would pass that exam and get your license to drive a motor vehicle. Now, it seems like a lot at the time, and it is a lot at the time, but with practice and a teacher, these tasks that seem like a lot to remember become second nature, and you become more confident as a driver, and you become a better driver, provided you stick to those rules of the road and those rules of what we would now consider as drivers of many years to be something of common sense. So I want to be your guide for your trading. I have a plan for you. My plan is very straightforward. Much is the same with learning to drive a car. But I will suggest this. My plan for you is there if you want it. You don't have to do it. But my plan is based on, as I say, over 20 years of trading experience. It works. It works. And I suggest that for people that are in here right now, what you're looking for is a bit of help. You might not be the greatest trader in the world. You might not be the worst trader in the world, but you want to take a bunch of those things that are holding you back and you want to just bring it together a bit. You know what I mean? Like you just want to come together and make it work. And for me, the deciding thing for me was when I was able to, the big shift for me in my trading career 16 years ago, I remember it very well. It was when I had a checklist, and this is where this all comes from, the way that I trade and my methodical approach with checklists, it comes from because that's what worked for me. When I was able to relinquish control, so I was able to relinquish control. I now didn't need to be a great trader because I wasn't. What I needed to do was the things that a great trader did. And guess what I had? I had a bloody notebook that had the list of items that I needed to do because this list was created with me from a great trader to help me to become a great trader. So practice comes first, greatness comes second, dedication, risk management, and a whole bunch of grit is what you're going to need. But I will tell you this, I do have a plan for you. I can make this work for you. I will get you your driver's license, so to speak. Follow this plan. Follow what I send through to you in the systemized approach, your trading business plan, and then you are ready to start. This webinar is to get you ready to start, and I hope you enjoy it. Okay, so how to build your crypto trading business. We're first going to lean into the scary stuff, the pitfalls of trading. Now, I'm not here to show you pictures of Lamborghinis. I'm not here to show you a picture of my boat or me holding great fish, although I'd like to. I'm here to take you through the realities because, look, at the end of the day, again, coming back to the driver's license, We know when we're getting into a car, we do the wrong thing, well, we could be maimed. We could even be killed. So we're serious about it. We understand the seriousness of getting things right. Well, I'm going to put this in front of you now. We've seen the campaigns on television, the car crashes, the drink driving, the being on your mobile phone. This is what this is going to be. But bear with me, because knowing what is to come or knowing what could slip you up is the first step in your structured plan. So the first thing is 90% of traders will fail, possibly even a higher percentage than 90%, but that was the one that seems to be widely agreed upon across the interwebs. Now, the thing with the 90% is people go, 90% of people trade fail. Guess what, Charlie Brown? It's the same statistic for starting a business. Trading is a business, so why wouldn't it fall into the same bracket as people that start businesses? 95% of them don't last more than a year, and that's exactly the same as trading. In fact, with trading, we can bring it down to 90 days, and I'll show that to you in a bit. The obstacles that you're going to need to understand, we're going to cover. In preparation for our business getting started, we're going to understand the business of trading, because we're not going to do this as a hobby anymore, because a hobby, look, it's fun, but if you're going to do a hobby, make sure that the only way that you're going to lose money is by spending money on the hobby. You buy the model boat and then you build it, and the joy comes from the process. Well, starting small with your trading career is a really great way of doing it, and treating it as a hobby, I don't think it's a very good idea, because there needs to be a lot more structure to it. Now, don't get me wrong. That doesn't mean I'm going to ask you, if you do decide that you want to work with me, that you're going to need to spend hours and hours and hours every day in the markets. Absolutely not. All I ask is that when you come to the markets, you follow a structured plan each and every goddamn time. Be consistent in your approach if you want consistency from your results. So we're going to set your business up right from the start. I'm going to show you how to manage risk, not just through paying it lip service. I'm literally going to go into one of my trading accounts, and I'm going to show you exactly how I raise an order with my entry price, my stop loss at which I would look to get out if it goes against me, and how big the trade will be and how to manage that risk using the calculator on this platform. I will guide you every single step of the way and make it remarkably simple and a repeatable process, as I do with everything. So I'll show you the live example of that. Now, we're going to also look at an example of a trading plan to work from. So you will need to write a trading plan if you're going to take this seriously and do well. Part of that plan, well, you guessed it. I keep saying plan. I've got the plan, and I'm showing some of it to you. A trading plan is akin to a business plan. You're going to need one, all right? You're just going to need one. And the plan, again, it's about, like any plan, the reason you write one is so you've got something to measure against. If you're just out there trading willy-nilly, you don't know what you're getting right, you don't know what you're getting wrong, and if you don't know what you're getting right or wrong, and there's no measure of being able to dictate what that is, there is no ability to learn and grow. If you want to make money from the markets like me, you need to be able to be accountable. A plan holds you accountable. Tools for daily use to put you into the right trades. I'll show you what they are and how to do that. It will also be sent to you in the business plan handout, and 2 simple, powerful technical tools for trading, which I will show you at the end. So make sure you stick around for that, because I'm going to show you. I'm not just going to talk to you about plans the whole time and show you every step of the way. That is part of it, but I'm also going to ask you to test me, because if you want to learn to trade and you want to learn to trade my strategies, you need to trust in what I do. You need to believe that I do what I do. Okay, so I can talk about what I do, and I can hopefully you'll go, oh yeah, he knows what he's talking about, and yes, I've followed him for long enough, or however you find me. But at the end of the day, it comes down to you. You need to feel comfortable about whoever it is you're going to work with. I'm going to show you 2 things, just 2 things out of my written checklist, my trading plan for finding trades. I'm going to show it to you, and I'm going to ask you. Go to the market and test it for yourself, because if it works for you and you can see what this does, then maybe that's time for you to come across and learn the full strategy, because, well, you have to believe in something before you can really pour yourself into it. So we're going to do all of that. Before we go any further, there is a risk warning and disclaimer. Please read through this. Of course, this is educational in everything that it suggests. Okay, I'm not suggesting that you do anything. My objective here is to teach you about the markets and its flows and how to set up and run a trading business. We're planting the seed today and the tree starts to grow. It will grow as far as you allow it and as much of the work you put in. It's up to you from here. Okay, so let's start now with YouTube University. Now, I get this all the time. Oh, you say, oh, just learn everything on YouTube. Learn everything on YouTube. And look, while I definitely use YouTube for learning stuff, absolutely, it's a bloody amazing tool. It's kind of like, this is going to sound weird, but the thing that popped to my mind is how to plait my daughter's hair, right? Practical things like that, how to fix your vacuum cleaner. These types of things will take you directly to the cause of the issue, more or less, and you will find it because it is kind of binary, isn't it? It's give me a solution. Here's the solution, and it is what it is, and you can test that, and you can fix things. I use it for that. I also use it for entertainment, but when it comes to a complex methodology, YouTube's not going to be your best friend. Now, don't get me wrong, you might have found me on YouTube. Cool. But I haven't been able to deliver and give you everything of my experience and my learnings and my education and my teachings through a YouTube series. It's just, there's lots to do. YouTube is really, really good at giving people the belief that they know what they're doing when they don't. And I get it. Okay, YouTube wasn't around when I started trading. Thank goodness for that. Or maybe not thank goodness for that. It cost me a lot of money trying to work it out myself. But anyway, my point being is that you don't know what you don't know. And that's what YouTube doesn't prey upon that. But it does make famous people that don't have a clue because they're good at just promoting or, whatever it may be that they're good at. It might not make them actually good traders. And YouTube, as I say, if you don't know what you don't know, it's a very slippery slope. It's, YouTube's free, and so too is failure. Failure is free. So I don't want to diss YouTube, but I also want to make it very, very clear that your best bet to use YouTube is to find someone that you resonate with and you dig deeper into, and then you go and learn from that person, or you look for where you can find some, something like this, where you can actually connect and you can see what it's all about. If it makes sense to you, chances are it will go well with you. If it doesn't make sense to you and it looks complicated, it's more than likely going to be something that you will struggle with. So from YouTube, let's go now into the 90-90-90 rule. Lack of proper trading plan and strategies. The 90-90-90 rule is that 90% of traders lose 90% of their balance in 90 days. Sounds pretty scary. And that's why I wanted to put it at the front. The 90-90-90 rule, 90% of traders lose 90% of their money in 90 days and they leave, simply means that, okay, if we know that this is a statistic that the world sees as being factual, how do we not be in that 90? How do we be in that 10%? Well, we know what people don't have. They go to YouTube, they don't have a proper plan, they've got a few videos, they've got a bunch of vibrato, confidence, cockiness, and they go into the market lacking emotional trading and psychological abilities. The biases that a lot of things with traders, they get wiped out because of, there's two things, there's fear and there's greed. Now, whilst having a plan and having a strategy are two absolutely crucial factors to your outcomes and your success long term, it's an understanding of that is really, really important. So how do we get an understanding of that? Well, it stems from that structure, that plan, and that ability to execute, measure against our checklists and our plans, and hold ourselves accountable. Now, in my full program, of course, I do break down psychology, what to do when things go wrong, what to do when things go really, really well, because often that's not something that people talk about. I cover all of that. A lot of people chase their trades. Again, this is just down to the emotions and the lack of understanding for what it is that you're doing. It's very easy to switch and be emotional over here, if you've not done it for a long time. It's very easy to switch and flip when you don't have a structured approach and a plan to know, okay, I'm going to have winning trades. I'm going to have losing trades. And I'm probably going to make some mistakes along the way. But I have a plan and I'm sticking to that plan and I'm going to keep pushing forward because I can see where I'm going wrong. I'm going to change a couple of things and I'm going to move forward. Huge thing here is risk management, and that's why I'm going to go into it in detail. So most people don't risk less than 2% per trade. As a matter of fact, for me, it's 1% per trade maximum. Only 88% of new traders that fall into the 90-90-90 rule will use stop losses. And position size. So 80% use stop. So 88% use stop loss. 62% position size, contributing to 72% annual losses and a 90-90-90 pattern. All of that data, you can throw that out the door because the message is clear. Manage your risk with a stop loss. Manage your trade size and how much you lose with trade sizing. Let's move on. People have inadequate tools, although often they've got too many tools. They've got too many tools, or they think. Now, the difference between where you want to be and where you are today is probably thinking. I don't think I can do that. I think I already know. All of these thinks and thoughts don't help unless they're coming to, I think I need help, I think I need a plan, and I'm going to find how to do that. It's as simple as that. What you're going to learn is to have long-term success here, guys. Look, it's a grind at times. I'm not going to bullshit you and tell you that, it's always peaches and roses and rainbows and lollipops. Mate, it's hard sometimes. And sometimes the hardest thing is doing nothing. You go through periods where markets are sideways. If I got an uptrend, sweet. If I got a downtrend, sweet. If I've got a choppy sideways market, hands, sit on them. Do nothing but show up every day. That's the bit of psychology that is very difficult. And that's why I produce this content and do my scans within my Discord community so that we can chat about it. We can go through it. I can show you what I'm doing and I can tell you under which conditions I'm staying at and under which conditions I'm long and which conditions I'm short. Again, there is a plan there for your long-term outcomes. So let's go now and look at what this plan is, what this plan is, what the path looks like. And it really does start that, to be profitable in trading, you got to learn to trade. Okay. Now that might come as, whoa, shit, what a shock that is. But I want to just emphasize on this a little bit because I know what this industry that I am within, which is education, trading education, market education, that sort of thing. I am absolutely abundantly aware of how many shysters are in this space. Now, there's also some fantastic operators. Like, I'm not just here to, say how bad things are. There are some great operators within this industry, crypto, within trading, within financial markets. Don't get me wrong. There are some absolute legends. And I'm friends with a number of people that are in the same space as what I am. But there's a lot out there that sell a dream. And that's, sales 101. Sell the dream. Tell them what they want. Stand next to a Ferrari. Show yourself in a private jet or, all this sort of stuff. And I know it does sell. Now, I don't do any of that because it's bullshit. It's just, for me, it's bullshit. But the reality is, I got to point a couple of things out so that you're aware. Because what I want, if you're going to work with me, is I want you to start with a proper understanding of what's there. You can do this. You can make this plan work. I have that plan for you. You can make it work. But I want you to be fully aware of what's to come. The methodology should be simple, okay? And I do make it simple. There's checklists for everything. There's lots of checklists and there's lots of rules and there's lots of plans. Don't get me wrong, there's a fair bit to it. But at the end of the day, it's a logical process that we follow. It's not quite paint by numbers, but that's sort of the best way of sort of capturing what it is. It's a methodical approach. And there's lots of methodical approaches for different areas to what we have to do. So the simplicity and the structure, it's there. But just because something is simple in its mechanics doesn't make it easy. What do I mean by that? The thing that makes this difficult is you. The same with me. The thing that makes trading, when it ever gets difficult, it's me. It's not the market. The market's the market, man. It's not the market. It's this thing here. It's this thing here. So you are going to face a bunch of things throughout your trading career, and I need you to be aware of that. I will make it simple and you will make it difficult. Then you will measure against my simple, and then you will work out why you're making it difficult. And the reason you're making it difficult will be inside of here. Now, it's harder to work out the old headspace, and that's why we've got accountability and so many rules around it. But more importantly, that's why I bring you a community of other like-minded traders. You can communicate with those traders, speak with me, speak with them, be involved in the scans, share what's happening with you so that we can feed you what we did in those same moments, because everyone in the community's been there before, to help you through it. So you've got to learn to trade. It's going to take some time. Some of the absolute musts is you've got to trade size every single trade bar none. I don't care if you think this is the Moby Dick of all trades, the best trade you've ever seen. I give zero shits about that, because it's not. That's you thinking again. There's that mind. Don't let it fool you. You trade size every trade. You manage your risk on every trade, and you know exactly how much you're going to risk on every trade. You've got to use a stop loss. That goes in with trade sizing, right? If 88% of new traders don't use a stop loss and fail, then you better bet your bottom dollar that we're going to be using them 100% of the time. And you've got to manage your risk. So all of this comes down to understanding yourself, understanding your plan, and executing on your risk principles. This is the path to a successful trading plan and successful trading outcomes. You now need to understand how this works. You need to understand how you're going to make that work. And I'm going to show you how simple it can be for you to get in and understand these bits and pieces. Now, of course, in my program, there are downloadable things. There are videos that you can go in and watch time and time again, following through with this process of going long and going short. So right now, I'm going to take you to one of the trading accounts that I use to trade. You will see exactly how to use this platform to raise a short order. I know it's a short order because I know the trade. And I'm also going to suggest to you this. The account that I am using in this example that I'm about to show you will be the same company that is the link within the trading business plan send out that has gone to you now. There's a page there that will have your trading view account. It will have your trading account. And of course, that matches with how to raise the order and manage your risk right now. And then also how you can get the list of contracts for that specific trading plan so that you can scan the market on TradingView with ease. All right, let's go and do that now. So the whole thing I've been saying is about having a plan. I have that plan. I'm trying to give some of that plan to you. It's your decision as to what you do. But when it comes to every single trade, I'm planning my exact entry and my exact stop loss, which is the place I get out if it goes against me. Now, these are precise levels. These are precise parameters, as well as the size of the trade, to make sure I'm not risking any more than I want to. These parameters are decided by the trading strategy itself, which is also derived completely from a checklist. Now, I want to show you something. I want to show you how to raise an order. Right now, I've found this on Cake. Here's my watch list, which I do a scan in my Discord community most days. All right, it's live. They watch me scan. I explain to them what I'm looking at, why I'm looking for it. They have the same strategies, and then they can go ahead and execute based on the market. Now, in this particular video, what I'm showing you is a short position, because I can make money, and so can you, whether the market goes up or down. I just need trends and to follow my rules. Now, I'm going to have Cake here. My entry is going to be as it breaks the low. My stop is if it breaks the high. Now, I'm bringing this into you here. This is Bybit, the platform that I use for my trading. Here's a trade that I'm already in, but I'm going to go Cake. And I'm going to put this up here. Now, Cake, I've already got the levels written down, which is as it breaks the low of this 8-hour candle with a stop above the high of that 8-hour candle. Now, because I don't have an 8-hour time frame here, I know what it is. It's this candle here. in the course, I show you a lot more detail. I just want to get this order raised rather quickly, just in case it triggers while I'm talking and I miss it. My entry is, you can see up here on the legend. Okay, so I hover my mouse over that candle. The low is 2.25. Okay, 2.2553. So I'm writing here, cake, E equals 2.35. S equals, well, the stop loss is S equals. The high is 229, as you can see up there, 2.293. So my stop loss is 2.30. Now I want to risk 500 US. Actually, let's make it. Let's do a smaller number just to make it more normal, I suppose. I would like to risk, say, $250 US on this particular trade. Now, I've got a heap of different options. I've got a limit order. I've got a market order. I tend to use conditional orders. And in this case, what I'm going to do is I'm going to show you how I can raise a conditional limit order. So the trigger price. Now, the trigger price is the price at which the price needs to hit before my order goes into the market. So it's 2.252 because it's 2.253. Yep. So 2.252 means that as soon as it's breaking the low of that candle, boom, my order goes straight in at 2.25. And I'll put that in here. So that means that my entry is going to be at 2.25. It's a limit order, which means that it will only fill me at 2.25. Now, if I was to go and put trigger price in at 2.52 and change that to market, I don't need to put any number in there, because what I'm suggesting is that as soon as it hits $2.25 and 2, it means bang, a market order will go straight into the market and I will get filled at that price. It will fill my market order. I might get a little tiny bit of slippage, but that will be fine. So if I was to just do it at 2.5 like that, would be my entry. It would just fill me at that price. Now, here's the way you work out whether or not you're going to use a conditional limit or a conditional market. What I'm now going to go and do is I'm going to work out my trade size. So you should do this before you do anything here. I've just put in my entry and that is all. So what we do is we come down here, hit this calculator button with Bybit. I'm just going to put in my E equals, so entry equals 2.25. I'm going to hit short. The close price, well, that's my stop loss, 2.30. Now, if I want to risk $250, I need to put the number in until, that doesn't happen very often. It's bang on. 250, usually you play around with this number to get it just right. Sometimes it'll be 300 and you just reduce it a little and you get as close to your number as possible. As it turns out, the perfect example does exist. 5,000 AVAX short. So I've chosen the option short with leverage set at 10, which is absolutely fine. My entry price is at $2.25 to short. My stop loss is at $2.30. So if it puts me in at 225 and then it moves away, it takes me out of the trade, because that is the point at which I have decided to be taken out of that trade. No hopium. A structured, straight up plan for the trade, a structured, straight up plan for the entry, stop loss, and the trade size to make sure that I'm not getting surprised by the loss on a trade when I have a losing trade. So now I write down here, size equals 5,000. I just write that. I literally have cake. E equals $2.25. Stop equals $2.30. And size equals 5,000. Bingo. I now close that. I can now come into here and go, okay, should I be using a market order or a limit order? And the difference here, well, the decision is made based on the liquidity on my order book. Now, with Bybit, they have deep liquidity on many, many products. Some products don't have as much liquidity, and I teach in the course what to look for in regards to liquidity. Now, what you'll see is that between 0.01 of a cent, I will get filled to the short side here, okay? So there's 5,000 there, 7,000, 7,000, 10,000, 7,000. What I'm trying to suggest here is I'm not going to see a great deal of slippage. My order size is 5,000. It's highly probable that I'll see zero slippage and I will be filled exactly at the level that I desire. So I'm going to have trigger price, I'm going to have market. So as soon as it hits $2.25, I want to market sell that. And now I know the amount is 5,000. So that's my entry taken care of. I now come down to here, TPSL, take profit, stop loss. I'm going to click that. I'm not going to put a take profit in just yet. I'm going to put a stop loss because that's all we're going to cover in this particular example. The stop loss, 2.30. The final check, again, I use my notebook for my entry, my stop loss, and my size. It means no thinking. It means no mistakes. It means pure execution of my plan flawlessly. And you need to just have a process of repetition when it comes to this every single time. Now, there's videos like this, how to go long, how to go short, how to manage risk. All of these perimeters are covered within my members area. It's all there. It leaves nothing to thinking. Not only that, there is also a checklist, item by item by item, literal pictures and exactly what to do following through this process for those that are more visual. They're reading, they take things on through reading as opposed to watching. You'll learn this really quickly. It's very, very, very easy as you do it more and more. So the final thing to do, double check that this is all correct. And if it is all correct, you will note here expected loss will tell me right there, $250 US, which is right smack bang with inside of my perimeters. Final thing to do, I hit short. Well, that's interesting. It's telling me I'm about to place a large market order. Now, with this, it's a red flag to me. I'm like, okay, what have I done here? What have I done? It's a large order. Well, this is an automated system from Bybit to capture my attention. Now, I'll come back. I'm looking at the order book here and I'm seeing that there is no issue. Now, let's just say I do what I did before. Well, watch what happens when I do this. So I'm going to go to limit now. That's my limit order, 2.25, because that's my entry price. My quantity is 5,000 and my stop loss is the same. Okay, it's all tickety-boo, happy days, 235 for that, no problem at all. Look, I hit short. When I do that, it comes up here. It gives me the final breakdown of the entire conditional order with my price, with the amount, with everything that is there. Don't worry about all of these things because this is just something that you go, oh, what? The three things that you need to just double check, and you don't really at this stage because you should have done it before, is the entry price or the trigger price, the order price, the price at which should be filled, and the amount, your stop loss, and that is it. Hit confirm. You'll now see your order come down into here into the conditional order book. Now you can change any of this. You can then go ahead and you can put your take profits in, which are, obviously I'll show you how to scale out and whatnot, where to take your profits, how to scale out so you get to risk free nice and early. And it's not what you think. It's not, moving your stop loss to break even as soon as possible. I think that's probably one of the worst things you can possibly do. It's about methodical, planned management of risk, scaling out to keep the capital you have under control, because that is the most important thing you have, and making sure you also take advantage of any potential upside gain without selling everything. Okay, so lots more of that within the program, but this is how to raise a short order with, typically how you're going to do it will be through using orders. I never buy or sell at market. Simple reason is puts you in a mindset of rushing. It means if I'm buying at market or selling at market, for me, it means that I have missed the trade. My plan is simple. My plan is effective, and my plan's helped thousands and thousands of people. There's only one reason why, because it is basic. It is straightforward. And if you want to join that plan, then this is the first part of that. It's a step-by-step process around management of your risk. It is the first thing you must understand and the last thing that you must do before you get into a trade. So that's how you raise a short order on the Bybit platform with those orders. So now that you know how to raise an order using the platform that I just showed you on, which is Bybit, the next stage is really going through a little bit more of the detail of this plan. And I want to introduce you to something that's really important. And the question is, what is the difference between somebody who doesn't have success in trading and somebody who does have success in trading? Now, I'll list a few things for you because many of you will have been there before. There's a lot of frustration, there's emotion, it's annoying. There's so many things. Or if you're frustrated, if you're annoyed, if you're up and down, if you sort of feel like as soon as you get into a trade, the market goes against you, well, the chances are you don't have a plan. What's the difference between unsuccessful and successful? They know what to do, they know why they're doing it, and they know how to do it when. Okay, so on one hand, not understanding is a whole bunch of whatever mix of absolute crap that you get. The person that makes money, they know what to do, why they're doing it, and when to do it. We're going to start touching on a little bit of all three of those as we have throughout this event thus far by going into the tools of the trade. So naturally, with every business, you are going to need some tools to operate your opportunity, also to operate your business. The first thing for technical traders like myself and like you is to make sure that you have good charts. Now, I will remind you, there is a trading business plan checklist that I send to you with this webinar. Please do go through it and follow the steps, because those steps, again, are there to get you started, and then you're ready if you wish to take the next steps and learn the why, what, and when through my trading strategies. First of all, you've got to prepare your charts. If we're looking at charts, it's price measured by time, it's the truth, it's honesty, it just is what it is. Then you need to make sure that you've got them. I use TradingView for my charts, and again, there is a link there to show you how to do that and how to get access to TradingView, and it's all there in that business plan download. You got to set up your exchange account. Again, in that download, there is a link there to open your account so you can have the same trading account as me. You need to be able to use margin if that's something that you wish to trade. Now, I will suggest as well that the way that I trade and the way that I teach, I like using margin personally. And the reason I like personally using margin is because it decreases my counterparty risk. And what that simply means is, I'm going to have collateral sitting on my exchange account to be able to trade, right? Now, if I'm using margin, it means that I can have a much smaller amount of capital at risk on that third-party platform. So if there was any issues with the exchanges, it's not going to bother me as much as having a large amount on that platform. So for me, managing my trades through the use of margin is an absolutely critical tool. And again, I will suggest that if you decide to use margin, you need to understand it. What I showed you about entry, stop loss, and trade sizing just a moment ago, that is going to be something that you do on every single trade. But there's a lot more of that if you decide to take further steps with your trading with me. So you want to make sure you've got a list of the exchange that you're trading with, a list of charts or a list of their perpetual or futures contracts for the platform that you're using. For that, you want to go across and you want to go and use watchlist.guru. Again, this is a business, it's completely safe. It's set up through me and a friend of mine. You can download any exchange watch lists or any exchange list that you like on that particular website, watchlist.guru. Now, when you choose your exchange, you got to bring those charts across to TradingView, and then you're able to start looking at the market. Something else that's really important, of course, is that you would be doing well to speak to your accountant. Now, of course, trading as a business means running it and operating it as such. The accounting side of it is not up for me to tell you how to do. You would be better off speaking with your accountant because everyone has different structures and are in different jurisdictions. So have a chat with your accountant and see what's going to suit you best. Set up a trading log. Now, a trading log is very, very simple or very, very complex. My recommendation is to keep it pretty simple because it means that you will actually follow it. You want to be able to track your trade entries, your trade stop losses, the trade strategy, whether it got 1-to-1 and what the final target was, how many stop moves that you had, and anything like that, along with the screenshots that provide relevant information around the time you took the trade. One thing often people do is they overlay the checklist that they learn from me so they can show what items they've ticked, both in essential and bonus factors. And then they do this for one simple reason, okay? It's so you've got something to measure against. If you're tracking your trades through a trade log and taking the screenshots of your trades, you are now able to go with your checklist and go, okay, well, here's the trade. Here are the bullet points. Here are the the things I need to tick the boxes for. Oh, it was actually divergent on the 8 hour. I took the trade on the 4 hour. It was divergent on the 8 hour. I missed that. Now you know to go back into that chapter and re-watch that again, because at the end of the day, you struggled with MACD. You know exactly where to look and you know exactly how to look. Now you go back through that section and you remind yourself, because now you are aware of where the mistake was made. If you can measure it, you can manage it. And setting up a trade log is all about that. Now, talking about your accountant and talking about running it as a business, you will need to download your trading records from whatever exchange platform that you decide to use. You will need to have those results or those trade logs in a nice simple place. And generally, if you want to do your own spreadsheets, go ahead and knock yourself out, or just hand it to your accountant if that's what you agree to. But one thing is very, very simple. Just do it each month, guys. You don't need to do it at the end of each day. Personally, I don't think that's something that's a good use of time. I think at the end of each month, go and download between date to date, boom, export it onto your own computer and put that into your list of things to hand to your accountant at the end of the BAS or financial year. Okay, let's get now into a trading plan. And I'm not here to read out every single thing from this list. It's an example to show you the sort of thing you're going to have to work on. For those of you that do decide to work with me, well, there's going to be a whole section on how to create a trading plan, so rest assured. For everybody else, let me go through a couple of things here from a client of mine or a student of mine, Bob. Real name. It's not just a random Bob. A couple of things. First and foremost, Bob has his goals listed at the very beginning. Why? Well, it is exactly that, a strong why. You need a strong why to show up, to remind yourself what you're doing and what you're focused on. You're going to need a section on strategy, to outline the exact strategies that you're going to trade, give them names, give them rules, and stick to them. That's a big part of your accountability. Now, if you can't write down the rules for a trading strategy that you've just got in your head, you don't have a strategy. End of story. You go into the risk section next and dictate how much risk that you're willing to take per trade. Now, that can be a percentage amount. I recommend a percentage amount, because if you can make money on a $2,000 account, you can make money on a $200,000 trading account. If you can't make money on a $2,000 trading account, you can't make money on a $200,000 trading account. But I'll tell you the thing that remains the same. 1% is 1%. If you start your business by taking away the dollar emotion, it's going to bode you very well as your account continues to increase as you progress in your trading journey. So make sure you have percentage marks in there as well. Anything that you think you need around risk, make sure that you capture it there. Now, this section is trade mechanics. Now, not everybody has trade mechanics in their trading plan. They'll just list the strategy and then just basically put the checklists in there so they know what they're sticking to. Now, Bob's gone into a little bit more detail. He looks at different things around when he's scaling out to take his profits, how he's going to trail his stop loss to lock in further profits, and what time frames that he is willing to trade. Now, of course, this is going to differ from person to person, as everyone is going to be different. Some people might want to trade the 15-minute, 30-minute, and 1 hour chart, whereas others, they want to focus on a daily and weekly time frame, meaning they're not as active and involved in the market, but they are still there doing their thing and trading these incredible strategies. So it's up to you to work out how you skin this cat, but the idea behind this is really to make sure that you have a plan and that you know what it is. Accountability, accountability, accountability. It is so crucially important. Bob's also got a section here because he is measuring his success against real checklists. So he's saying here that if he has 3 trades in a row that do not flawlessly execute, he also has a plan to step back and review himself. He takes 2 days out of the market to make sure that he doesn't dig himself a hole that he can't get out of. It's called revenge trading, and it will ruin accounts. Having this trigger plan or having this plan in place helps Bob to be accountable once again, and to step back when it's time to step back. Because in trading, when things aren't going great, often it's not better to double down and put more time in, as you might have done in other businesses. More time in the business, more problems solved, and more work done frees you up later for more leisure. When it comes to trading, when things aren't going well, the best thing to do is stop, walk away, have a breather, come back to center, come back to being relaxed, assess against your checklists, all right, against your plans, and review if there's anything that you need to review. You might have made some mistakes, well, you'll know what they are because you'll have something for which you can measure against. The rules of trading for Bob is here, not the trading rules for the strategy, not the strategy rules, but the rules for him as an individual. He's not a slave to the market. He will never be a slave to the market. Do not feel guilty if you're going on holidays and trade set up. Do not feel like you missed a trade when it's at 2 a.m. and you were asleep. Things like this. Reasons to not be worried, essentially, is what is in this section here. Now, the final section of Bob's trading plan is really, again, it's for him and his accountability. I'm responsible for my life, my feelings, for every result I get, and even by following the TC strategies. I'm Trader Cobb. I accept there will be losses along the way. It's a part of my trading process. As such, I do not let my results or the market influence or negatively affect my emotions, but use the learnings to become an even better trader. Bob's got his head in the right place when he wrote this. Bob's got a very good keel to follow. He's got a fantastic plan. He knows what he's doing. He knows what he's not doing. He knows what he's doing if it goes against him. He knows what he's doing if it goes for him. He knows his strategy checklists. He knows his rules. He knows his risk management. Bob falls into the category of trader that knows what he's doing, why he's doing it, and when he's doing it. You need to be in that bucket as well. Okay, incredibly important. That's a quick run through of what a trading plan can look like. I don't want to spend too much time on it. There's a lot more detail to go into for those of you who decide that you want to take the next step, but that's a good place for you to start. Now we get right stuck into how to find the opportunity. All right, this is where the rubber really hits the road from a standpoint of let me show you my ways. I'm going to show you 2 items out of my checklist trading strategy. These 2 items, what it's designed to do is to give you some understanding of just how clear a chart can be and exactly what we're looking for. Now, look, at the end of the day, what I want to show you is something that you can test. At the very beginning, I did say, I don't want to leave this to you just trusting me. I want you to look at this. This is the section I want you to deeply look at. I want you to test this theory. I want you to put these moving averages on your chart. I want you to look at it and go, really, really, really prod at this so you can be absolutely certain that what I'm saying is absolutely true. You're not going to find anything other than the outcome of fact, the reality of when a trend occurs. You will see this happen. So let's look at the 2 ingredients from the checklist. We're going to start first and foremost with trend. Listen, there are only 2 types of trends. I will trade the market when it goes higher and it's trending higher. I will trade the market when it goes lower and it's trending lower. Now, the difference between these 2 trends to me are nil. It makes 0 difference. I do not make more money when the market moves up. I do not make more money when the market moves down. It is exactly the same dollar for dollar. And the sooner you can get that mindset shift, you won't be scared of any conditions in the market. I mean, yeah, we'll have a look at that short from earlier as well, and see just how that's going at some point. Okay, so it's really, really simple. What you've got for a downtrend is a series of lower highs and lower lows. Now you can see that over here on this chart, a lower low, a lower high here, down to a lower low, a lower high, a lower low. Now the interesting thing to note is that it's the right-hand side. So we've got a lower high, so we have a low, lower high, lower low. That is all you need for a downtrend. A higher low and a higher high is all you need for an uptrend. And it's always going to be on the right-hand side of your chart. So you don't need to be looking at a huge amount of data and getting all confuffulated and confused, and you need to make it really, really simple. So uptrend and downtrend. And if you learn to read these charts the way that I do, if you just focus on trend and trend alone, some of you are a little bit versed in trading already. There'll be double tops, double bottoms, triple tops, triple bottoms, head and shoulders reversals, head and shoulders tops, head and shoulders bottoms, all these bloody names. None of them actually matter, because every single, here's the thing, literally every single reversal pattern is a reversal of trend. So instead of jamming your head full of all these different names and necklines and shoulders and do-da, you just look for a higher high and a higher low for an uptrend and a lower high and a lower low for a downtrend. And about 15 different variations in the market can be completely ignored by you because you've simplified trend. Now, the moving averages that I use are the 10 period and the 20. The 10 represents this white line. Excuse me. On top here, it is the last 10 candles. Now, remember, when I talk about price action, it is a honest and true representation of price measured by time. Now we're going to take the true representation of price measured by time, and we're going to bring that in and as a moving average as well. We're going to layer that in very, very nicely. Little bow on top. And we're going to see the price action smoothed out. So the white line that you see here, or the 10 EMA, whether it's E or S, it doesn't really matter. I use the exponential. That's the last 10 candles. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And it's smoothed out. This one down here is the 20. And yep, you guessed it. It's the last 20 periods, the last 20 candles. Now, they smooth out on a chart quite nicely. And I want to see them fanned out. And I use these along with trend to give me an extraordinarily high probability of the trend continuing. Now, the two zones that I trade from within, and this is for the cradle trading strategy. And look, I know this looks a little bit crude because it is a little bit crude. I've just used a highlighter here because it is a zone, the buy cradle zone. So the buy zone is in and around this 10 and 20 period moving average. Note how when it pulls back in, moves away. It pulls back in, it moves away. The flip side is true as well. When you have a downtrend, it pulls back in, moves away. It pulls back in, it moves away. So we're going to add, I'll look for, a trend, and we're going to have our moving averages in the 10 period and 20 period exponential moving average, and we're going to see how price reacts to those moving averages. And we're going to keep it so simple because guess what, ladies and gentlemen? That's exactly how I trade. So let me take you in now. Where am I? Here we are. Boom, 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 boom. Okay. Well, while I'm at it, now you can see here, downtrend, lower high, lower low. Market pulled back into here. The candles have moved lower. Look at all these. Lots of these pulled back in. Now, the one thing that I do want to show you, whilst I am here, is it's pulled back a little bit here. But have a look here. So this is the AVAX trade. Yesterday I raised an order. That order is it's not here, but the position of AVAX you can see here. Now, the way that I've done this is it's an exact trade. It's an exact cradle trade. You can see over here the realized profit because I took some profit as it was falling in my direction. I've locked in $248 US and currently open there is 168 USDT there as well. You can see my stop loss being up here. If it does pull back and take me out, well, I won't lose anything on this trade. This was a trade where I risked $500 US. I've closed half of it at 1-to-1. And now if it continues to move to the downside, great. I'll continue to lock in profit by trailing my stop losses. But if it takes me out of the position, it really doesn't bother me too much because, well, it's a break-even trade. So just showing you this as evidence of, how obviously I showed you how we use the Bybit platform. I showed you raising orders. This one, I would have raised an order on in the example, but I was already short this from earlier in the morning. So back into the charts, let's have a look right now. Again, we've got our 10 period moving average here, which is the white one. We've got our 20 period moving average here, which is the red one. I'm just going to hide that MACD for now because it has zero relevance to what I'm trying to show to you right now. Keep in mind that there are about 8 essential factors, and then I have bonus factors, which are literal checklists that you tick. I'm showing you 2 things here, just 2 things to show you how much just that knowledge can transform the way that you look at and read a market. And it's going to be also quite powerful because you're going to see that it is any market at all. You have to remember that I've been trading for 20 years. I got into crypto in 2017. So I have more experience trading things like stocks, commodities, bonds, FX, you name it, than I do with regards to crypto. It works in anything and any time frame, very robust. So here we have Bitcoin. Now, the idea with this is to, I always say, and what I teach on my course and whatnot, and what I show in my Discord community each day is really down to something really, really important. And it is really just look for the time frame that represents the trend the best. Now, I'm going to show you a couple of things here in the top 10. Okay, we're going to move around. So it's about finding the trend, so time frame that represents the trend the best. Have a look at this on the daily. I told you we need a trend. We need a lower high and a lower low, or a higher high with a higher low. In this case, here is our lower high. Here is our lower low. But the daily hasn't pulled back into the moving averages, has it? No, it hasn't. You move around the time frames and you're not always going to find it. Now, what I'm showing you pulls back in, moves away, gets back in, it's a zone, moves away, back in, moves away. Look at the moving averages here, ladies and gentlemen. This one didn't quite get back in there. Have a look at Cardano, moves away, very, very close here, moves away. So lower high, lower low. It pulls back in, it moves away. Now, not only that, I'm actually going to I'll show you the top 10 here because they're all going to look much the same. So what I don't want to do is I don't just want to focus on the top 10, because with crypto, the market does move kind of in step with itself. But what I will show, we're looking at the 8 hour here. Works just as good going on the lower time frames as well. Have a look over here. Even for this very short space of time, pulls back into these moving averages, moves away, pulls back in, moves away. Go even lower. Go even lower. Let's find another period of trend. Over here, we've got a downtrend. It moves back into these moving averages, and then it moves away. And then it moves back into these moving averages, and then it moves away. Now, you have to understand that there is a lot more to these specific trading strategies than it just trending and it just pulling back into those moving averages. There's a number of other layers which then slims out my list even further. But the important point to recognize here is with two simple ingredients, I've got a whole, workbook full of ingredients. With this, it's just two of them. Okay, just two. We're going to layer 6 more over the top of it. But with just two, you can start to see that this cyclicity, this movement back into these averages, when combined with trend, there is a high degree of probability the momentum continues in that direction. And it works in both directions, and it works in any time frame. So what I want to do here is I want to go back to Bitcoin, because it also works for your investment portfolio timeframes. Have a look at this chart. This is the Bitcoin monthly chart, and it's a chart that not enough people look at, in my opinion. Market moves away. Look, it pulls back. Where does it pull back to, ladies and gentlemen? Straight back into these moving averages. And then what does it do? It moves away. And then when it gets extended from those moving averages and it pulls back, what does it do? It comes back into, to where? Back into these moving averages. Then what does it do? It steps out again. Now, it's not going to do this forever and ever. At some point, the trend will either change or it will become invalidated. But until that happens, and of course we do have, we layer other things in there to know what to look for in a trend that is starting to lose momentum. And again, that indicator is there to do one thing only, to stop me from taking a trade. Every single ingredient is designed to stop me. But when everything's met and there's no reason not to trade, then I will trade. Now, this is the reason why I can be calm through these pullbacks, because I'm looking at a monthly chart from a position of understanding and experience. The sky was falling over here, and everyone was, well, not everyone, but a lot of, it's over. And then we moved, over 100%. The same thing happened over here. The same thing is going on right now. There's 2 reasons I can remain calm, cool, and collected and not be affected at all. 1, I know how to short the market and profit as it falls, as witnessed in what I showed you on the AVAX trade. Okay, I'm up about 500 US dollars currently on that trade. Look, it's nothing massive, but it's better than a kick in the teeth. The market's falling and I'm profiting from this strategy. Two, my long-term portfolio is exactly that. It's long-term. So I look at a higher time frame chart. The goings on of a 12-hour chart for me is not of interest to me from an investor's perspective. The monthly chart, now that certainly is. Perspective, understanding, and experience. Remember, the person that does not trade well, and the person that does trade well. They understand what they're doing, why they're doing it, and when they're doing it. This person doesn't know any of those things and is filled with emotion, fear, greed, and just, they're flustered. Know what you're doing, know why you're doing, know when you're doing it, and know bloody well how. That's what a plan is. That's why I can become, and these moving averages will help you with that. Now let's move away from crypto right now. Let's go into the non-crypto market because I want to show you something. I want to nail this point in hard, right? Let's look at the Dow Jones. Okay, so this is not even crypto. This is not a crypto at all. This is the Dow Jones of the US, the index market. Moving averages. Look, we've got trend. There's a higher low, higher high. We pull back in. Where do we pull back into? Back into those moving averages. And then what? We move away. That moving away is our predicting the direction of the market. And if we're long, we're profiting from that. We pull back in. Where to? Back into this zone. We move away. What does that mean? It means we're profiting if we get into a trade that's long. Again, pulls back in, moves away. Let me double down. Let's go to gold. Let me go to gold. Okay, this is the daily chart on gold. Okay, we get a higher low, we get a higher high, we pull back in. What happens? We move away. We have this beautiful, beautiful run. Now, perfect. Here's an example when we pull back in and we haven't moved away. Now, of course, because I've not been telling you what's a trade and what's not, because you don't have the full checklist yet that is there in the program, I will tell you, I'm not going to say whether there was a trade there or not, because that would be unfair. Bottom line is this: it doesn't always pull back in and move away. There are moments when the market does just go and keep going again. So it comes outside of these moving averages. That's why one of the rules is that they've got to be fanning beautifully. When it pulls back in, like look at it now. Would I be looking for a long here on this time frame on gold? No. But what about on the 2-day? Higher low, higher high, pulling back in to the cradle zone. Probability, it moves out. But there's a number of other rules there to stack that probability in my favor. And finally, let's go to yen. I don't know, just pulling this chart up out of nowhere to show on an FX. We have a lower high. We have a lower low. That's not a good section actually, because it's not the greatest of trends. Here you go. If you can find any chart with any trend, okay, so that's just a series of higher lows and higher highs, higher low, higher high, pulls back in, moves away, pulls back in to where, moves away, pulls back in to where, moves away. This one pulls back too deep, so there's nothing here. Pulls back in, moves away. I think it's fairly evident there were two simple things: trend and the moving averages. You can see how this is an incredibly powerful way to trade the markets. It takes the emotion away, it takes the fear away, it takes the greed away. Having a systemized approach, a plan of attack, knowing what it is that you are looking for, ladies and gentlemen. Knowing how to act when you get those scenarios coming together. The what, why, how, and when. You can have that. You can know that. Super, 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 super duper important. Moving average and trend, two massive kickers. Now, the last thing that I want to do here is I want to show to you how I do this very quickly, what you receive by joining the Grow Me Co and being a part of our community. So I'll do that bit right now. I'll show you and I'll take you through exactly what we do. Okay, so as a member, when you join, you enter in here to the My Account section. This is where the course is. Now, I've made this very easy to navigate. First things first, watch this video. It shows you how to get the most out of this platform and the most out of this course and the most out of this community. There's step-by-step workthroughs of everything. I'll take you into the GMC trading course right now and I'll show you how I teach people. I have all these different checklist items, of course, which you have to tick off as a part of the strategy. So what I try and do here is I try and work through the individual checklist points in the correct order as well. So you're not trying to learn everything at once. You're learning each individual line item, tick box essentially, and then we bring it all together. I teach the section, you can see how long, and then I bring it in and look at the actual live market. So it's not just about the learning, it's about practical use cases as we go. And you can see all the way through here, money management, managing a trade, account risk, keeping your head right, what charts do we use, setting up TradingView, joining Discord, how to scan the market. So I do a whole section on showing you what to do to find opportunities and trade setups. Also, a whole section here on understanding liquidity for you and your trading, because that's an important element I think most people miss. If there's not enough liquidity there, then you can't trade. And if you do try and trade, you're going to get slippage and it's going to cost you money, which is risk. We minimize every single layer of risk that is associated with the markets. The Trader's Toolbox is where you'll find your video on how to raise orders, both long and short. You'll also find down here checklist. If I click that button, there will be an automatic download, excuse me, for a whole checklist on that particular item. You've got the strategy checklist here. Now, this checklist right here is to take you through both trading strategies. You can print these out and laminate them, do whatever you like, but it will have the essential factors and the bonus factors for the two strategies that you have just learnt from the course. Print them out, have them with you, and tick the bloody boxes. Keep it simple, right? Next up, download your watch list. This is where you go to watchlist.guru. Watchlist Guru will have all of the major exchanges there and their spot lists and their future list. All you have to do is drop an email in and you get access to all of those lists. You download that. There is also a video on watchlist.guru, which will show you how to import, if you trade with Bybit, all of the Bybit futures contracts onto TradingView so that you will have the same charts as me when I'm scanning the market in Discord. And then finally, order cheat sheets. So once again, if you're more of a, you'd like to look at something as opposed to watch someone do it, in this section of order cheat sheets, there will be a number, like paint by numbers, start here. And this is about how to use Bybit to raise your orders once again. So it'll be showing you, risk calculator here. This is for that. It will take you through systematically every single step that you require. Now, once you have gone through the course, you will then be given access to the Discord community. And you'll see here as well, I'll just show you for yesterday. This is what happens most days in here. I do my scan with the community. The scan goes out. I do it with them. They watch me scanning the market in real time. This is where I'm finding trends. I'm finding trades. I'm looking at exactly what I'm looking at throughout the day. And throughout that process, I'm creating a watch list. Now you can see this is my watch list that was for the day, right? I send a link to it so they can open that straight away, and you can see AVAX is right in there. I also then upload a video either of the entire scan of the market or it's the watch list portion. So if there's 10 things in the watch list, I will talk you through exactly what I'm looking to do and why. A bit of back and forth through here, excuse me, and then pointing out some other opportunities throughout the day as and when they are setting up. Now, you'll see it's very heavy on me right now, but don't get me wrong. Have a look up here. There's a lot being shared by other people as well. Now, ICP, that's absolutely gone on a massive tear. But others will be posting their trades. There's another watch list in there from me from the day before. We've got lots of different things in here. People posting their trading opportunities, posting how they're trading, what they're trading, and you will be doing the same there too. Now, you can see down here this morning, 1-to-1 on AVAX. That's the trade that I just showed you. We have a section in here as well where you can have a brag. Yep, we'll talk about great trades, the trades that made us money. It's a pat on the back because you deserve it. This is your crew now. This is where they post their profits and their trades and their outcomes. And look, we had a pretty long period of not a lot going on for a while there as the market was very, very sideways after this event. Check this out. There was loads of shorts setting up the week before the October 10 crash. Have a look at this. Now, of course, you get lucky sometimes, but you only get lucky if you're in a position. This guy, and a number of others as well, I will add, was short. That's a 62x return on risk. So if it was just $100 risk, that's 6,200 in reward, 3,300 in reward. So again, you got to be in it to win it. You know, this is us in here showing our good trades. There's different trading strategies that we're talking about: the breakout trade, the cradle trade, the stalking list. And there's also just us having general chat about what's going on in the market, alts, whatnot, airdrops, all sorts. I do my scans down in here. So the Discord community is there for me to guide you and for you to work together with other like-minded traders. It's not wild and crazy. There's just over 300 in there at the moment, and it'd be great for you to join there as well. So that's what the program is. I teach you through the course online. You have access to that for as long as you need it. You will always have a login. Please just don't share it. It's yours. I trust you, and I want you to do the best of it. So as you find that you might need a section, let's say that you're MACD, you've got your checklist, and you go, oh, I'm struggling a little bit with that. I know I need to go back through and I need to work that out. Well, then you just come back in and you find the chapter that fits exactly what it is. So let's talk about. So you're like, oh, what am I doing? I've got to manage this trade that I'm in now. It's running really, really well. Well, come and watch chapter 9 again. It's only 29 minutes. You can watch that and hone right in on the area for which you need to focus on. It's broken into a very easy platform, a very easy program, and it's something that is available to you. Remember, the people that do well, they know what they're doing, why they're doing it, when they're doing it, and how. This is a plan for you. From the very beginning, I said you need to have a plan in place. If you agree with this plan, if this plan makes sense to you, then best you stop thinking about it and best you jump in here. We'll be in there in the Discord with you. Anyway, that's the program itself. And it'd be great to see a bunch of you in there. Okay, so let's recap what we've been over and your plan moving forward. First things first, you'll have been sent the trading business workbook. Get in there. Follow each and every itemized section there. There's a page there that will have your trading view, the account, and Watch List Guru. All three things that you'll need to go ahead and click the links within there to get yourself set up with this plan moving forward. Now, that's whether or not you come and join me and work with my community and do my full course and learn all of what I just showed you that's available to you or not. So let's keep this momentum. Let's keep the action in place. If you do decide to come and join me, you're going to get the full training course. You're going to get the 2 trading strategies with the written checklist, a complete full plan, access to the Discord community, and you're going to be able to share your trades, ask for help, watch what I do daily, learn from the watch list, and look at the trades that I'm finding on a daily basis, as well as the community. It's all part of that package. You post your trades in the community, and naturally, it's going to take a little bit of time until you find the nerves will clear and you'll get in there. But trade, post your trades, ask for help, lean on us as a community. One thing that you will see, and it will take you being in there, but you will see it's a nurturing place. It's not a big boys club. It's not a big macho, misogynistic. It's not a big wank. Excuse the French. It's just great people in there. The trade, heaps of women, which I'm really proud of as well. There's a really comfortable and supportive environment in there, and I want you there if that's what you want as well. The result of going through all of this, planning. You remember at the very beginning I said to you, you've got, you're learning how to drive a car and there's all these different elements, yeah? And you must do this to pass your test. What I'm asking of you is this: if you're ready to be trading and you're ready to take this seriously and step into the shoes of not the person over here, which is emotion, doesn't know what to do, they're freaked out, they're confused, they're flippant, but into the shoes of the individual who knows how to trade, who is this person who knows what to do, knows why they're doing it, knows when they're doing it, and they know how to do it. This person over here is cool, calm, and collected. This person over here has a lot of training. This person knows what's up. This person doesn't. This person takes action. This person takes emotion. This person would follow through with this plan. Start now. Follow the steps that I've sent to you in the workbook. Get that done. Come join me if that's something that you would like to do. But if you want to stay here, you need to have a plan and back yourself. And the only way to start here is to get started. So in the words of the famous Zig Ziglar, you don't have to be great to get started, but you have to get started to be great. Ladies and gentlemen, I hope you've enjoyed this webinar presentation, and I hope it's given you some clarity, some structure, and something for you to test. Go and check those moving averages out and the trends and see if this would work for you. I look forward to welcoming a number of you into my community. It's going to be great to see you there. And please, if you have enjoyed this and you think that there are friends and family who might also benefit from this particular webinar, then please do send them my way. Send them the link and let's get them through this. I hope to see you in the community and be able to help you and guide you and see your trading unfold and grow into the future. Have yourself a wonderful day. You've got this. It's all there if you want it. Cheers, guys. Bye for now.